First of all, welcome everybody for this webinar. I'm happy to host Rayhan, which probably many of you already know. You see him a lot on social media doing lots of webinars and podcasts. Welcome, Rayhan. Rayhan, can you give us a quick introduction of yourself and Tax Star before we get started?
Yeah, no, thank you for having me on the Wafeq webinar. I'm also proud to have you host me. Last time I had Maha did a great job, by the way, but I've got the main man, Nadim, the founder of Wafeq, hosting today. So I'm Rayhan. I am the co-founder of Tax Star. We're a tax technology business based in Dubai. I'm also the founder of Alpha Pro Partners. We're an accounting firm in Dubai. We're also a platinum Wafeq supplier. We use Wafeq as well, and we like the software. So and Nadim is always adding new features, and he's always listening to our feedback, which is great. So Nadim, thank you for making that happen for us, and listening to your customers and making those really good changes to the product as well. I've been here for 9 years. Previously, I used to work in back in the UK. I was working for hedge funds and asset managers, running finance departments before I moved to Dubai to set up my firm originally. I also host the Alphapreneurs podcast. Hopefully, Nadim, I need to get you on that podcast as well. We want to hear your story, because I'm sure you've got an amazing story. You started Wafeq quite a while back, and I guess you started during the VAT period as well, right?
Right.
I'd love to go into your story. So, but that's for another topic for another time. So yeah, that's me.
And tell us a little bit about Tax Star, briefly, Rayhan. What does Tax Star do?
So we are a tax technology company, and I am an accountant, and I'm very passionate about technology, and I wanted to build a product that makes it easy for accountants to do their compliance. We have a corporation tax software. We're looking to do e-invoicing for larger businesses later on next year, and we also have a zakat product for Saudi for next year as well.
Wow.
One of the things about zakat in Saudi is we find that there's a lot of confusion and a lot of misconceptions on how to calculate it for businesses, especially for the small businesses. So we're aiming to have a product launched for next year to help the businesses out there to be able to comply and do the calculations without having to worry, because you're always getting messages from Zatco on make sure you file and make sure you make payment. So we want to make that process stress-free as well. So that will be for next year, but that's obviously for the Saudi products as well. And obviously we'd love to integrate with Wafeq as well.
Yeah, definitely. All right. Well, thanks for the introduction, Rayhan. Quick comments on this webinar. So you can ask questions by clicking the Q&A button at the bottom of the Zoom bar. We'll tackle the questions at the end of this webinar. I'm gonna turn off the presentation, Rayhan, to make it more human, like conversational. Can you tell us? Let's get started with the hottest topic right now, especially given the deadlines, corporate tax. As many of us know, and I hope you as a business owner already know, we have a deadline. There's a deadline at the end of this month to file your corporate taxes. What should I know as a business owner, or even as an accounting firm, if you want to address both angles, with respect to filing corporate tax, maybe just the 101 kind of filing corporate taxes?
Yeah, so I'm sure many of our listeners, our viewers have already filed their corporation tax returns. And if they haven't, you want to start that process as soon as possible. Now, one of the things that a lot has been said about corporation tax. So, corporation tax at 9%, all businesses need to register, all businesses need to make sure they file and they have their calculations in place. And I guess, for the ones that have gone through that whole process, this is, very much a revision, but for the ones that haven't or going through that process, there's a number of things you have to take into consideration. Now, this will probably be the first time you've done your corporation tax return, which the deadline is 30th of September. And there's a number of things you have to think about when you're doing your first return. You know, if you're an accountant, you know that your opening balance as of when you closed your books the previous year will affect your tax calculation in the current year as well. And those, you know, that would need to be audited before you are going to, prepare your, your books for, 2024. Other things you want to take into consideration is the fact that your accounts needs to be prepared on an IFRS basis. And therefore, if you have not done that before, you need to make sure that your books have been checked by a qualified accountant or someone who knows IFRS to ensure that you've ticked all the boxes in terms of the presentation and the accounting treatment of your corporation tax return. The other thing you need to think about is for most small businesses, one of the major kind of considerations they need to take is the related party and connected persons transactions. Now, related party is if you have a business that you own, two businesses that you own and you've done a transaction with, or maybe you've got one of your family or relatives who is in the business or who has another business and they've done transactions with you, or even let's say a family member is working for your business or you're working for your business yourself. These transactions have higher scrutiny that you need to take into consideration, and you have to also provide the supporting documentation when you do your filing for corporation tax purposes. So making sure you do benchmark and arm's length tests is important. And what that means is that if you had done that transaction with a third party, so someone who's not related to you or connected to you, are those terms the same? So for one classic example is if you are the owner of the business, before corporation tax, you was probably paying yourself a low salary. Now you're going to pay yourself a high salary because you want to save money on tax, right? Now, if it's justified from a from an arm's length market rate point of view, then it's fine. But if it's not, then you're overflating your wages in terms of what you'd normally get, and you could be pulled up on that. The other thing you have to take into consideration, and maybe it's a bit too late for you to think about it now if you haven't started planning, is there's over 200 fields you need to fill in your corporation tax form. The amount of information you provide to the FTA is unprecedented. I've worked in the UK, I've worked in Saudi as well. The Zakat form is nowhere near as, the level of information they require is not the same in Zakat, in corporation tax, in the UK either. In the information needed for the FTA is extensive. They ask for financial statements, they ask for breakdowns of your P&L, your connected persons, your related party transactions, a number of employees. You have to do a number of elections as well. And if you don't have an accounting firm, you want to make sure you have a credible accounting firm that can check your calculations. And if you are an accounting firm, obviously make sure that you have one or two highly specialized firms that you can turn to in case you're not sure of doing certain certain transactions or disclosing certain information as well. Because the moment you put that information on there, it's open for audit. And you want to make sure that as much as possible, every single box has, you have your supporting documentation, and you make sure that you've gone through all of that information, and you've you're it's not an assumption. These are numbers that you can clearly sign off and you've got audit trail for as well, and it's justified. So I can go on and on, but
What Rayhan, let's say I'm a single person company. I set up a very simple free zone business. It's just me. I do consulting work. Can I file my corporate tax myself? And if not, what should I expect in terms of how much I would need to pay an accounting firm to file my corporate taxes? If you can give us a range.
Yeah, no, that's a great question. So one thing I would, if you're a consulting business, and you've got your own company, you usually have two options in terms of filing your corporation tax. One is taking advantage of small business relief, and the other is doing a full corporation tax return. Now, if your revenues are less than 3 million and you're not part of a multinational, then chances are that you do qualify for small business relief. which means that the return is very simplified. You know, you put your revenue and you put a number of disclosures, and then you submit. You can technically do it yourself, but you know, this is the first time you're doing some sort of submission. So you always want to make sure you get an accountant or someone who's done it before, just to check to make sure that everything's done correctly so you can file. Because remember, the moment you file, you know, that's it. You can change it afterwards, but then there'll be penalties, and it may put you in a high risk if you keep changing your tax return. If
And
you're
you
doing
make permanent decisions, right? There are some
exactly.
decisions that are permanent.
Elections are permanent as well, and you
Mhm.
can't change that. If you want to do a normal tax return, then I wouldn't advise you as a consulting business to do that tax return. I'd advise you to go to the experts to do it for you, because they'll need to fill in those forms and prepare the supporting documentation. Also, one of the things you need to consider as a consultant is your salary as well, because usually you will be the biggest earner of your business, and that would need to be benchmarked. And typically what you would do is you get your CV, you go to your recruitment firm, you ask them, look, this is my CV, how much would I earn if I was to work somewhere else with the same job title? And then they'll give you that information back, and usually that's what you can use for supporting documentation for your salary. In terms of fees, I have come across a lot of cheap firms and a lot of expensive firms for the same work. We've had people come to us and they've said, you know, someone's charging us 300 dirhams for a tax return, and someone else charging 20,000 dirhams for a tax return as well. So there are opportunists in the market, and there are also individuals who are just trying to get, you know, companies in their door so they can upsell and so they can file a tax return for them. One word of caution I would say is that if you don't have a good advisor now, the chances are you're not going to find a good advisor until October, because from my experience, I know quite a few accounting firms. The good ones, they're busy. They're very, very busy. And so you may have to wait until after the deadline, which means you'll have to pay a penalty. And if there's any unpaid tax, and there's, you know, fines and penalties on top of the unpaid tax as well.
Mm,
So you're very much in a dilemma now. You don't have that much time left.
mm,
So that's some of the things that you know, I would particularly advise on. You know, it'll be very difficult for you to find someone who's good, because they're all the good accountants. They're all busy right now.
mm. And what are the penalties if we're late for late filing?
Yeah, so if you're late filing, the first month for the first year is 500 dirhams per month for the first year. And in year two, it goes up to 1,000 dirhams per month. Now, the tax liability penalty is 14% per annum per month, right? So if you have a tax liability of, let's say, 100 dirhams, and you're paying 14 dirhams for the whole year, but it's divided by a month. So it's quite a high, if your tax liability is high, then it is quite a high amount to pay. And so maybe you might want to just pay the tax liability now and then do the calculation later. Again, we want to make sure that you speak to your an advisor to ensure that you're doing the right thing, because these are things that, we're getting crunch. We're already in crunch time as it is,
Mm,
and it'll be very difficult to find a good advisor to do that. So
mm,
that's
mm,
what I advise. Feel free also to call the FTA. So the FTA do have helplines. It will probably be very busy at the moment, but they can't give you advice. But what they can do is, give you the steps that you can take in terms of what to do within your circumstance as well.
mm, mm. And what would you advise me, going back to the scenario of, let's say I'm your friend Rayhan, you're an expert in the field, um, and I have this consulting set up. Um, let's talk about the small business relief, for example. How would you approach this? What's your recommendation in terms of the election, or maybe tell us a little bit more about what small business relief is, and whether it's something that I should elect. or not?
Yeah, so great question. So there is a dilemma for some businesses right now who haven't filed, right? So if you want to do a simplified tax return, then you'd file small business relief. Obviously, you need to be eligible for small business relief, which means your revenue should be less than 3 million. You shouldn't be part of a multinational. And there's other things that you have to take into consideration as well. The flip side to that is you could be a small business, but you're loss making. If you're loss making, what you're able to do is carry forward that loss in future periods. But because you're in crunch time, you can't do a full disclosure right now because you're loss making. And therefore, you might go down the small business relief route. Now, as a service provider, the fee to file a small business relief is cheaper, obviously, than doing a full tax return with the loss carry forwards as well. Where a loss is where you've made a loss, and if you've made a loss in your tax return, you'll have to carry that forward in future periods. So let's say you make a loss this year, but the next year you make a profit, you can offset your loss against your profit, so you pay less tax. And that's a relief that the government has provided in the laws. And so you need to weigh the two together. If you don't find a good advisor, then obviously you may just have to go down the small business relief route and just make sure you file your obligations. If I'm giving you advice to a small business, practitioner who is a consulting business, if you're loss making and your loss is not that much, let's say it's less than 50,000 dirhams, for example, then just to save you the headache of going through that whole process and filing late and getting an advisor to do the work for you, and then providing them the supporting documentation to show that you are loss making, it may just be easier to do small business relief, because it's a quicker process, but you will then lose the ability to carry forward the losses, because if you file as small business relief, you can't carry forward your losses.
Mm. And that loss carry forward, does it sit in the books, or you keep it outside the books? How does it work? Simple question.
So the good question. So the loss carry forward, basically it's on your tax return. So as soon as you've claimed it, as soon as you've filed a loss relief, what happens is that's on your books now. And then in terms of when you do the accounts the following year, you'll see that you've claimed a loss, and you can offset your losses against it, against your future profits. We've got that calculation in Tax Star as well. From an accounting point of view, if you're certain that you've got a profit the following year, then there are circumstances where you might record that in your books as well. But again, I don't want to give specific advice. I'd rather just say, make sure you speak to your accountant for your specific advice to ensure that you're doing the right accounting treatment on your books as well.
Mm-hmm. Got it. Let's move to how maybe I believe did you have something that you wanted to present, Rayhan, in terms of content, or shall we talk about Tax Star?
We can, yeah, I mean, I can give a quick sneak preview of what we have in terms of a product. One of the things that like I said, when developing the Tax Star product for corporation tax, I have a lot of experience in the UK, and I've used a lot of corporation tax software in my previous experience back in the UK, and I wanted to kind of bring that into this market, so then businesses here can take advantage of that. Because one of the things that all businesses will be doing right now is they'll be using Word and Excel, Microsoft Word and Microsoft Excel, to do the calculations and produce the financial statements as well. And using those two methodologies to prepare accounts is, it's a recipe for disaster, especially if you need supporting documentation. You're emailing documents out, you have version control issues that you have to deal with. These are things that are not ideal when you're calculating, hundreds of tax returns. If you're an accounting firm, or even if you're a business, you may have turnover in terms of, you may have one accountant this year, another accountant the following year, and that calculation was done by the previous accountant, but you can't follow what they did. So having it all in the system is very important. Similar to what what Wafeq does with accounting, right? You want to make sure that everything's done in the system. You don't want people to do their bookkeeping on an Excel sheet.
Mm.
So that's what
Especially
we've
for
done.
accounting firms who have many filings to keep track of, right? That's the biggest
Yeah,
um, efficiency brought by software.
yeah. But you'd be surprised that I've come across so many companies that are still doing accounts in Excel as well, right? And in this day and age, I don't think that's something that is sustainable anymore, especially with all the regulation coming in, with
Mm,
VAT, corporation tax, e-invoicing now. You've got Pillar 2 that you have to think about if you're a larger business. Systems is the way to go, and that's quite important from a from a compliance point of view as well.
mm,
So we've created a system where you can do your calculation. We've added a few bells and whistles onto it as well. So for example, we've added a financial statements module. So if you are a company and your revenue is more than $50 million, 50 million dirhams in revenue, or if you're a qualified free zone, then you need to produce financial statements. So those audited financial statements will be done by your auditor. Everyone else have to produce financial statements for when they submit their tax return. So we created an IFRS for SMEs template in our system, so then accountants can use that going forward to fulfill the compliance obligations for corporation tax purposes as well. We've also added a feature where there's a deadline management on your tax documentation. So the FTA brought out a new rule where from the 1st of April, if your documents are expired in the FTA portal, Emirates ID, trade licenses, passport copies, if you don't update them within 20 working days, then you get a 5,000 dirham penalty. So what we've done is we've added document reminders in our system as well to kind of help you keep on top of the compliance as well. So we've added quite a few bits and pieces in there to ensure that you have an audit trail of you keep track of what's going on from a compliance point of view as well.
mm. I guess one of the things that is specific to corporation tax, Rayhan, is the fact that it's a once in a year process. And as opposed to, for example, accounting and bookkeeping, it's a continuous process, right? At least if you're doing it properly. Um, is there, how do you think about like managing like this peak, like the season, like tax filing season, basically, in terms of, managing the volume? Is there, for example, in the US, there are two deadlines, right? There's the regular deadline, which is typically in April, and then there's an extended deadline, which goes in September. And in both months, there's a surge of activity, right? Everybody becomes super busy. So how does a tax accountant manage their accounting firm when there's, peak seasons versus, let's say, more quiet months when there's no filings? Is there anything that, like, how do you think yourself about managing your firm with respect to, peak and low season kind of activity?
That's a great question. And there's a number of things I will go into. Shameless plug for tax lawyers. We have a practice management suite where you can see all your deadlines are at in terms of for your clients. Accountants are, we are usually the ones that are stuck in the middle for many reasons and for many different processes, right? So the problem with tax season and the reason why a lot of people do it last minute, and it's not just a UAE thing, it's a global phenomenon. Even in the UK, when we used to do self-assessments and tax returns, it was always done in the last minute because even if you're given 9 months to do it, it's always done in the last minute. Now, I think if you're an accounting firm, the first thing you want to do is have a culture and a structure where you're proactive. You don't want to have a culture and structure where you're reactive, because everything will pile up, people will get stressed out, people will leave, and you're going to have lots of issues with yourself and your clients. So you want to start off with a culture where it's proactive, and you have a culture processes that is proactive as well. What does that mean? It means, you have some sort of practice management suite within your firm or CRM. It doesn't even have to be CRM, it could be an Excel sheet, it could be anything that keeps a firm organized. So you've got all your deadlines, you've got all of your clients, when when certain accounts are due. So that would be the first step that I would recommend. The second thing is communication with your client. So if your client probably doesn't know that they've got tax return due, they probably don't know that your accounts haven't been closed yet. They probably don't even know that you're still waiting for them to give the receipts that they should have given to you like 4 months ago, right? And so communication is key, and having that structure in place to ensure that the flow of information from client to you is as seamless for them as possible. If they understand the requirements and the deadlines and the penalties, that will help you, right? And so you have to start having meetings with them, remind them, let them know what's going on. Now, another thing that you can do is a tactic which the airlines do, right? In a sense that if you're booking a ticket today, it's cheaper than if you book it last minute, right? Unless there's availability. So then you got to think about pricing and your dynamic pricing. So maybe you say to your client, if I file my tax return 1 month before the deadline, it's going to be maybe 50%, 100% more expensive than if I file it earlier, right? Because that will push them to get them to, give you all of the information before it's too late. Because also keep in mind, as an accounting firm, you will also get a lot of last minute requests from outside that are not your existing clients. So what you want to do is you want to be in a position where you're able to take on these new clients that come in the last minute, but your existing clients, you want to finish the compliance for them as quickly as possible so your staff are available to take them on. So you also want to think about your pricing, how you price for your services, and reward the ones who give you your information early. And you may have to penalize the clients who give you the information last minute, because don't forget, it's actually a higher cost to you, because it means if you've got an accounting firm and you're taking on a client and you're doing the compliance for them, it means you may have to pay overtime for staff who need to do the calculation, and then overtime for someone who needs to do the review. And then the risk goes up, because if you're doing everything last minute and you make mistakes or you bypass some of your controls, that's an additional cost to the firm that needs to be compensated as well. So although it can be quite penalizing to the client and frustrating to them that they have to pay more, even if they give last minute, they have to know that they're putting you at a higher risk, and you're having to deploy more resources in the last minute to support this client than if you was to file it 1 month in. And I think those are the kind of things that you want to think about. There's not much you can do in the last minute, right? You can call around and ask other accounting firms if they can take on some of your work, which many accounting firms probably wouldn't want to do because they wouldn't give business to someone else. But I think a lot of accounting firms have learned the lessons this time round, and I'm sure they're going to implement some steps for next year to ensure that they are, they're ready for next year. And also training is needed as well, because there's going to be some changes. There are slight changes in rules from 2024 to 2025. So you need to also factor in that the staff will need to be trained up to ensure that when they carry forward the balances, when they do the next year's tax return, they know what they are, they know how to calculate as well.
How do you keep your staff trained and up to date on the latest legislation?
So we recently got an ACCA approved employer status, but we got that because what we realized is you need to have continuous education of staff if you run a firm, because things are moving so fast. You've got VAT, corporation tax, you've got changes to corporation tax, you've got e-invoicing coming in. And then on the technology side, you've got AI. Wafeq, you guys are bringing new features all the time, right? So you got to keep up with it. It helps us, of course, but you got to keep up with some of these changes because you want to use these changes for you and your client as well. And so I think it's important that what we do is we do weekly sessions to go through all of our training materials, and we get staff to present for half an hour specific topic. And we used to do this bi-week. First, we did it monthly, then we went bi-monthly. Now we do weekly because there's so much information out there that we need to cover to ensure that our staff are up to date with a lot of the information and regulations. Now, if you are a highly specialized audit firm, obviously it means you got to send your guys out to training courses for like a month, so then they can get deep into some of the topics. But that's how we do it. There's another way of doing it, and that is, you may have a subject matter expert for each type of topic within the firm. So you might have one person who's a tax expert, another person who's a technology expert, another person who's a compliance expert, and you go down that route. That obviously, it all depends on what type of firm you are, and also depends on, what is your positioning as a firm, how do you position yourself? And then the other thing is, we are a community of accountants, and we're not that, we are quite friendly. So feel free to reach out to your community. I know that mutual friend of ours, Ayman, he has the counting room. So he has a community in there where he's got loads of accountants, and I'm in that one of those WhatsApp groups, and there's always people who ask questions and someone who's got answers, and we're all accountants in that group as well. So you want to be part of a community where you're able to leverage on each other's knowledge and experience to kind of help each other, because we do have a tough job as accountants because, as I said, things are changing rapidly, not just on the legislation side, but also technology as well. And we need to keep up with technology to be relevant for our clients.
Yeah. Let's move to, us as a Wafeq, as an accounting software, we come in before the tax filing, right? This is where all the data entry happens, the bookkeeping, and so on. How do you currently manage this process of building up, let's say, or constituting the corporate tax return from the data itself? Do you do it, for example, at the transaction level, which is what we've heard from several accounting firms, that they want to be able to, for example, at the single transaction level, to specify whether this expense is deductible or not? Or do you do it at the account level? You ask the trial balance, and then you calculate you mark the deductions and exemptions yourself. Is there a preferred way, or does it depend by client? What is your approach at your firm?
So, great question. If you're accounting for corporation tax, it goes before the transaction level, right? It starts from your contractual agreements. So, for example, we spoke earlier about the related party transactions and the salary of the owner of the business, right? You can put 50,000, 100,000, 200,000, right? Dirhams per month. But is it at market rate? Have you done a benchmark study on to make sure that salary is correct? So it actually goes beyond that. And so you need to start with your contractual agreements and obligations. Now, obviously, these contracts can obviously be uploaded into Wafeq and saved there as for supporting documentation as well. You then need to make sure that your transactions are accurate and in the right place as well. Now, an accounting software usually is there to provide your accounts on an IFRS basis, right? So when you prepare your accounts, you then prepare your trial balance, which then gets audited. And that would be your IFRS books. So therefore, all of your transactions would need to be recorded from an IFRS perspective. That still means that your supporting documentation at the transactional level should be correct. It also means that your reports, your P&L reports, your balance sheet reports are correct, and making sure that you have the right cost of sales, the right operating expense in your books. Your balance sheet is, broken down accordingly as well. So what we would do is, we'd start off from the P&L and balance sheet and make sure that it has the right classifications, and then start digging deeper and deeper and deeper, depending on where the higher risk and the requirements are. Where Tax Star comes in is, when you're preparing your tax return, your accounting software is your starting point. And then you start making your adjustments based on your tax. So for example, your interest, if your interest is more than 12 million, then you have to go through a test to ensure that you can only deduct a certain amount of that through your EBITDA. Similarly, entertainment expense, what you would do from a accounting in your accounting software is you'd separate client and non-client entertainment, so then you can separate that out in your tax return as well. And then you want to have things like non-deductibles and deductibles. So for example, there might be some non-deductibles that you want to classify in your books. Now, from an IFRS point of view, those non-deductibles may be part of your OPEX, for example, right? But then you might want to have a slightly different classification where you can mark it, as a non-deductible. So when you're doing your tax return, it comes out, and then you can go through the transactions yourself as well. So these are some of the things that you want to think about from that point of view when you're doing your calculation. Also, bear in mind that there needs to be some sort of oversight in terms of you've prepared your calculation, someone needs to review it and check it, and making sure that that's done by someone else before you submit it is also very important as part of your process as well. And then you want your client to sign off on it. When your client signs off on your tax return, they are ultimately responsible as per the FTA. It's the owner of the business is ultimately responsible for the tax, and therefore they should be the ones that are signing it off. And you should never file it just by them saying yes. They should understand what they are submitting, so then they don't come back to you after a month, a year or so, saying, "Oh, you made me sign off this account. I didn't know what was going on. I just signed it." So you need to make sure the client is very much involved in that process, so they know exactly what you're filing on their behalf. So they are aware, and you don't have that liability on you.
Got it. And speaking with the end-to-end flow, so we're saying, it starts with your accounting, and then once it's pushed to Tax Star, all these 200 points or 200 fields that need to be prepared happen on that platform on Tax Star. Let's jump into shall we jump into a demo, Rayhan, or an explanation of the flow? So let me I'm happy. Let me start with so we'll start with the beginning of the flow, which as we said, so I've prepared some demo data here, so participants can kind of like follow and put some numbers on the reports. So let's take it. Let's start from the profit and loss. So this is a demo company that we've set up. We have the profit and loss statement for the previous financial year, right? And it looks, something like this. You have your revenue, your cost of sale, your operating expenses, other income, non-operating expenses, and then you get to the net profit, right? Now, what happens during the bookkeeping is, and this is something specific to Wafeq, actually, during the bookkeeping, your accountant can automatically set up rules either based on the account itself or at the transaction level to decide whether something is deductible or not. And that also would be pushed to Tax Star to reconcile also deductibility and make sure that the calculations are correct on both softwares. So the ultimate goal is really to generate the corporate tax, the taxable income report. So the corporate tax report looks like this. So you start with your accounting net profit, which is what we saw in the profit and loss. You deduct non-taxable revenue. So in this case, for example, we have dividends. Dividends from another UAE company are typically, correct me if I'm wrong, Rayhan, are typically exempt from tax. And then you add back, yeah. And then you add back any expenses that you have marked as a non-deductible. And again, here you can do these things at the transaction level. So for example, let's say you've decided after a review with your accountant that, look, actually this software is non-deductible because I don't have a receipt. I prefer to be safe. I'm going to mark it as non-deductible. So I'm going to go and mark it as non-deductible. And then if I go back to my profit and to my taxable income, I will see that the refresh. Oh, I think that was a 2025 expense that I changed. Yeah. So let me find.
I love doing live demos.
Yeah, I need to. I modified the 2025 expense. Let's say this one, okay, credit card charges. This one is non-deductible. Okay, and then let's go back to the profit and loss. There we go. Credit card charges. This is non-deductible, so it gets added back to your net profit. And you can do this in bulk as well. Typically, the way you would set this up is from your chart of accounts. When you're starting to work on a specific set of books, you would specify, for example, at the account level, what is the default treatment for corporate tax? Do you want this account to be fully deductible, 50% deductible, or non-deductible? Okay, and then the corporate, the taxable income report is generated. Now here, this is still, we're at the top of the filing. Tax Star will do so much behind this because it's not just the taxable income, right? It comes with a bunch of decisions that need to be made, questions that need to be answered. So this is only the bookkeeping part, or like, let's say the numbers part, more or less. And from there, this is if you've got the Tax Star integration in Wafeq, which you can set up from the integration, and that's where I'll hand over to you, Rayhan. So if you connect your Tax Star account to your client's organization, then we move on to the filing at from Tax Star, which is a lot more comprehensive and goes all the way to really being ready to file on Emirat Tax Portal.
Yeah, the other thing I'd like to add is the Wafeq corporation tax feature is not just a year-end feature. You can use it monthly as well. So if you're doing monthly management accounts, you need to accrue your corporation tax. It's a very good tool to do that, because the thing is that if you're trying to accrue your corporation tax and you're doing it manually, it's a bit of a fiddly process on an Excel sheet. But if you're able to just take this report and then post your tax journal, then it makes it a lot more easier when you're doing monthly accounts, for example. So it's really useful for that.
Over to you, Rayhan. You
Yeah,
can,
no, thank you very much. Can you see my screen?
Yeah.
Okay, so when you log into Tax Star for the first time, you have this dashboard, and what we do is we have all of your clients, and you can see what stage they're in and when they're due as well. We also have a report where you can see when your deadlines are due, and you can download this in Excel and PDF, and we also email it out so you can be proactive in your approach when you're dealing with your clients as well. When we go into an entity, for example, you have your own kind of dashboard, and you can see all of the different stages that are required. And what I'll do is I'll go into the calculation. Now, the methodology behind this calculation is that as an accounting firm, you can get your junior staff to start pre-populating a lot of the information. And then a senior can go in and review it and approve it and send it to your client as well. And what that allows you to do is allow your staff to your higher skilled staff to spend more time on advisory as opposed to number crunching. So what we've done is we've tried to make it as kind of user friendly as possible. And so where there's certain things that you need to be aware of as an accountant when you're doing your tax return, we've done that. So for example, if you're going to upload your TB, it should be in AED, right? Because your corporation tax return should be in AED, not in dollars, not in dollars or euros or pounds. Now, what we've done is you'd need to connect to Wafeq and you would need to pull in your TB. So what we do is we integrate very well with Wafeq, and then we pull the TB from here, and then we fetch it. Now, one of the things that would take the longest when we first launched was when you had to map your TB with our TB, it used to take quite a long time. So we built this AI mapping feature where it reads your TB and it would kind of map 80%, on average 70 to 80% of your TB with our TB, and that would then be your starting point of your calculation. The remaining bits is pretty straightforward. You just select one of the accounts, and then add, and then that's it. And then once you mark as complete, we'll then produce a P&L, and this is your starting point of your tax calculation. And one of the things we did is make sure that there's a reconciliation to your P&L. So for example, you may inadvertently map a balance sheet account to P&L, for example. And so we have these checks in here to make sure that that doesn't happen. Now, what we've also done is we have all of these different steps that you need to take into consideration when you're doing your tax return. Now, for example, if you have a share in participating interest, if you're eligible for participating interest, your income and your expenses are exempt from corporation tax. So we've added certain things like disclaimers in here. So when your junior staff does this process, they can think about some of the aspects of the law that they need to be aware of when they're doing their corporation tax calculation. We've also added this a little bit more complicated interest calculation. So with interest, if your interest is more than 12 million, then you can only use 30% of your EBITDA. But the EBITDA that you would normally think is the EBITDA is a different EBITDA, because the EBITDA in this situation has been prescribed by the FTA, and it's got a number of other aspects to it that you need to take into consideration. And we've added that, so then you can create your EBITDA within this schedule, and then you're able to calculate it correctly. And then any interest you cannot utilize, it then gets carried forward into the system as well. And again, we have the disclaimers as well. We've also added the connected party and related persons schedule. So remember, as I mentioned earlier, there's a lot of information you now need to provide to the FTA for your related party and connected persons transactions. So things like the name, the residency, the TRN numbers, transfer pricing method, any adjustments as well. So if you've paid salaries more than what they should have been, then you need to make an adjustment for transfer pricing and connected persons point of view. And we've added here attachments and notes so you can keep track of what's going on. We've also added this new feature where you can now download this in Excel, because in the FTA portal, you can now upload an Excel sheet to then upload all of your related party transactions. Because sometimes it could be, if you're a business owner and you've put a lot of your expenses into the business, or there's a lot of mix up between your personal expenses and your business expenses, you need to filter it out. You're going to have a lot of transactions that you need to disclose as well. So we've added that from that point of view. We then do your final tax computation. Now, this computation is a summary of all of the different pages that we have. You can then download this in PDF and Excel, and you can share it with your team as well. And then we have the tax return. Now, the tax return, believe it or not, has been changed many times this year so far, and we've kept up to date with all of the changes. One of the recent changes that has happened recently, if you don't know, is they added an EBITDA field in the tax return form, which only happened a few weeks ago. So we've pre-populated the tax return form as much as possible. So here you can see that, you know, the P&L has been pulled in from when we did the mapping. There are some things we cannot pre-populate. So your elections, for example, you have to do that yourself. We can't assume that we're going to pre-populate your elections for you. And this tax return form can then be downloaded into PDF and in Excel as well. You cannot download your tax return in PDF at the moment from the FTA portal. So you have a record of what's going on. We have record keeping, so you can keep all your supporting documentation in here as well. And that's mainly because you need to keep your records for 7 years and you want to have a single source of truth if you have an audit, right? So typically most, you know, accountants, they do the tax return in Excel, and then they'll have supporting documentation on email, on WhatsApp, on Slack, on Google Drive, on Dropbox. It's all over the place. So we want to put everything into one place, so then you're not having to worry about when you have an audit, you've got a week to respond. You can respond straight away with all of the information. And then we have two-stage approval as well. So we've put manager and client. So once you've completed your tax return, you want to send it for approval. And we've put a two-stage approval in there to ensure that, you know, someone's looked at it and your client has signed off on it as well. And then finally, we top it off with the financial statements. So we have a IFRS financial statements template in here that you can use. And this is for the businesses that need to produce, they don't need an audit because revenue is not more than 50 million. And they're not a qualifying free zone, but they don't have a template. So we've created this template for you. You can even download it in Word as well if you want, and you can modify it if you need to. But we've created this template so then, you know, you have the full circle. You know, you have the calculation. You complete the books in Wafeq, pull in your TB, prepare your calculation, and then you have your IFRS financial statements that you can then upload to the FTA portal as and when you need to do that. We also have a chat bot, but we don't have it in this version, but maybe I can show that another time. So yeah, that's us in terms of what we do for corporation tax.
Amazing, amazing. Thanks, Rayhan. We have a few minutes left, I think, for questions. So I'm going to pick up some questions from the Q&A. You can still ask questions if you'd like. So the first question, I'm a solo entrepreneur. My official title is manager on my free zone employment contract, but my real job is project management. Against what title should I benchmark my salary to be compliant with the FTA?
This is a very good question and a very common question. So as a solo entrepreneur, there's a number of things you have to think about. First thing is your legal structure. So if you are an LLC as opposed to an establishment, if you're an establishment, it's an extension of you as a business. If you're an LLC, you and your business are separated. There are separate controversies on that, because if you are the owner of your business, if you're a sole establishment, the problem here is you're working in your business, but you're also it's an extension of you. And so you need to be very careful in how you disclose your salary, because in some cases it may not be accepted because it's a sole establishment, it's not an LLC. So first thing you need to take into consideration is the legal status of the company. I know I'm not giving specific answers, but I'm trying to point you in the right direction so you know the right questions to ask when you go to an advisor, because I can't give advice obviously live here. In terms of your contract and your benchmarking. So look, if your job title is manager and your employment contract says project management, you have a problem. The reason why you have a problem is because if you have an audit, chances are that you'll be looked at from a black and white point of view, right? So if you have a manager top job title, the auditors are probably going to look at your job title and say, okay, you're a manager. What benchmarking have you done? Have you done it against project management? Then these are two different job titles that they may not accept. Also, if you do have a separate job title as project manager, then if you're going to argue the case that you actually was a project manager, then you need to have the evidence and supporting the supporting evidence to prove that you actually did do a project management task. So because you have two different job titles, my view is that you'd need to have additional supporting documentation to prove that that you were a project manager, and then do the benchmarking off the back of that. Again, make sure you seek advice from a tax advisor, but this is my my view.
And Rayhan, is there an indication of how much room is the FTA allowing with respect to salary? For example, am I going to get in trouble if, let's say, the benchmark says my role is 20,000, but I'm being paid 40,000, for example? Or is there any kind of information on this? I know that it's still the first year, and maybe the FTA hasn't yet started to do audits on salaries and things like that. But generally, is there any kind of indication?
So what we have to consider, so you've worked in the US, I've worked in the UK, right? When we deal with the tax department, sometimes there's a bit of leeway, right? In the UK, for example, if your receipts are less than £20 or something like that, you don't need receipts. In the UAE, even if you spend 1 dirham, you need a receipt, right? And that shows you the level of maturity in one market versus the other. And so, and you can't blame them because they're doing tax for the first time, right? Corporation tax for the first time. So they are going to take, if I was doing corporation tax for the first time, I would want to be as cautious as possible in terms of the way I police it as well and the way I submit it. So I always advise stick to the side of err on the side of caution. Try not to be too kind of cavalier in your approach to corporation tax. Also bear in mind that I once went to a seminar and it was done by a tax law. One of the questions he asked the crowd was, what's the difference between tax efficiency and tax evasion? Right? Very, very thin line. Tax evasion, the penalties are severe. Tax efficiency, you're doing everything within, you're making you're preparing a calculation based on the rules and you're being as efficient as possible. But where do you draw the fine line, right? So you have to be very, very careful from that point of view. We haven't seen any, I haven't come across any audits for corporation tax yet. But the moment you start seeing the audits, you'll see what type of attitude and approach they have to these audits, and you'll have to adjust accordingly in terms of supporting documentation and calculation. So for me, you have to err on the side of caution. You don't want to be in a position where you are being a bit too aggressive and you have no substance for it.
Okay. I started my free zone establishment in March 2025. Does my financial year end December 2025 or March 2026?
I think that's a technical question, and I don't want to answer like yes or no questions because that's then giving advice, right? So what I would say is just make sure you speak to, you can reach out to me privately. I can answer that for you, but I wouldn't want to answer it live, right? So, so yeah.
Do you provide accounting and bookkeeping services? So Wafeq does not, but Rayhan's firm Alpha Pro Partners does. So you can reach out to them if you need accounting service.
Or you can reach out to the Wafeq Markets portal and find a great accounting there as well.
Or you can find in our marketplace, in our directory of accounting partners. Hi, my company is in Meydan Free Zone as a trading company. My last year's sale was around 1.2 million. Please suggest how to do the filing for corporate tax. Very broad question.
So I'm not going to give you the answer, but obviously, if you're talking about free zone, are you qualifying or non-qualifying, right? And then if your revenue is 1.2 million, then chances are you qualify for small business relief, right? But maybe you don't. So again, I think the what you need to tie yourself down to is, are you qualifying free zone or non-qualifying free zone? If you're qualifying free zone, you would benefit from the 0% tax. And then if you're not a qualifying free zone, then can you take advantage of small business relief? Do you want to take advantage of a small business relief is what you want to think about and decide. Again, make sure you speak to a qualified tax agent who can help you with that.
Okay, I will take a couple more questions. Is estimated credit loss allowable for corporate tax deduction?
That
Estimated
is
credit
very
loss.
vague. So yeah, I mean, credit loss could be derivatives, it
I
could be trading. Again, it's pretty vague, so I don't want to answer it.
bad debt, I think bad debt provisions or okay. Okay, I am the sole owner of a DED company. I guess Dubai Economic DDE,
Yep.
maybe DDA. Small company, well within the small business relief threshold. Started the company mid 2023, before the first year's annual period. How should I treat the period that goes before the beginning of the first financial year, accounting wise and tax filing wise?
Again, that's another very. So one of the things that my role as tax star, we do not give tax advice, by the way, right? Because that's not our
You're a
job.
software, right? You're a software
Yeah, we're
company.
software. We're not. It's like Wafeq doesn't give IFRS advice. So I will help where I can, but obviously I can't give technical advice like this. Again, speak to. There's plenty of great on Wafeq Marketplace. I'm sure there's plenty of great tax agents on your marketplace as well. So feel free to reach out to a few of them. You know, I've met them in person, to be honest, and they're great. So yeah, I would say reach out to them. I cannot give you that specific advice. I can point you in the right direction. I'm happy to do that, but I can't tell you specifics.
All right, and with that, we wrap it up. Thank you so much, Rayhan, and thank you everyone for attending. And enjoy the rest of the week.
No, thank you for hosting me, Nadim. I'm honored to have the main man, and you've done a great job, by the way. So you should give yourself a pat on the back. You're always bringing out new features. You know, you're listening to customers. You meet customers as well. You actually are an unsung hero, and we don't hear enough from you on the internet. So you need to be more vocal on the internet as well. We want to hear more about your story.
I'm blushing, Rayhan. Don't do that. Anyway, we're not.
But yeah, no, I just want to say you've done a great job, and I want to hear more from you because you've got really good insights and really good, like your journey is really it's really interesting, and yeah, thank you very much.
Would love to have another chat, maybe in your podcast, or maybe we'll come up with our own podcast also.
No, I'm going to bring you to our podcast, and we're going to unpack your
Amazing, great. All right.
So thank you very much.
Thank you, Rayhan. Thanks, everyone. Bye.